All right, should be live. Should be everything working now. So at 2 p.m., the FOMC statement's going to come out, and Powell is going to talk some. Let me pull up the odds of a rate change. So almost 100% chance. There's about a 2% chance that there will be a decrease, but 98% chance that there will not be a decrease. So in the case if there is a decrease, that would be a very bullish shock to the market. I have the E-mini up here, and if the 2% case happened, that interest rates go down, then that would be a bullish shock, and we would not just close higher today, but probably have several days of bullishness. So we're going to pull up Powell's statement when he comes on at 2 o'clock, and we'll watch that for 15 minutes or so. And I don't plan on having the stream be too long. Probably it's going until like 2:15, 2:20, unless there is some nice movement that we could take advantage of. So while we wait, I'm going to review today's price action, and I'm not surprised what we got. That we got kind of this sideways market, especially, this was kind of an anomaly getting this sudden sell-off here. But most of the day's been pretty sideways, and that's common on an FOMC day. People don't want to be holding too many large positions going into the FOMC, and therefore you get a lot of sideways movement. We also opened within yesterday's range, specifically like this last leg, kind of this last range I had up here. It opened within that, and when you get that also increases the chance of sideways for the day. So looking at the trades, first thing that comes to my mind is we have this wedge here. First push, second push, third push. It's also double bottom. So it's a double bottom, a wedge. I think it's reasonable to be looking to be buying above that, but going for a swing trade. I wouldn't buy above this for a scalp. I would rather be buying above this and trying to at least go up to the top of the range. As we do have a trading range here. We are fairly low in the range, but we've been stuck below this moving average. Test here, another test here. So there's this risk that this double bottom is going to fail, which is, that's what happened. And because of that, I'd rather try to swing trade. So wedge bottom. I think wedges generally are okay to swing trade. I think it's better to try to swing trade from a wedge bottom like this. So if I'm buying here, I personally wouldn't go for a scalp. I wouldn't be buying for like 5 points. I'd be trying to go for more like 10, or try to get out up here. Perhaps even try to bet on this gap closing. So if we slide to the left, we can see here this day opened higher, and it never came back and tested this. Then over here, we ended up gapping through it again. So the market has not touched this area. I'll pull up the daily chart. So that's this area through here. The market has not touched that. So give me a moment. Let me check something on my other monitor over here. So I think this is a regional buy, and a kind of in the same way, we can see this sell off here. I'm gonna talk about this big bear bar, but I'm seeing a couple different ideas for selling here. First is this bear bar. Same idea as this. We're getting this wedge. So first push up, second push, and third push. Get a wedge, bear bar. If I'm selling here, I want to be trying to go for a swing. One, because it is a wedge, and so often you will get multiple bars, not just a couple of bars. You'll get multiple bars in the opposite direction. So I want to be trying to swing. And also, we're still getting these lower lows, lower highs. So high of yesterday, we have this high here, and now this is a lower high. We're still not above this, and then also the lows, this low, and then multiple lower lows. So we're still kind of in this larger, broader channel down. So I think selling there for a swing down is reasonable. Once again, I personally wouldn't scalp. I'd rather try to get out down here. Other shorts, really selling below any of these bear bars. I think the two that caught my eye the most were this second close. So the second close will move an average here. So first close, and then you can imagine it on a lower time frame. We're trying to test up above it, and it fails, and it goes lower. So we get this second close below the moving average, like short in there. This bar has a big tail on the bottom, and is lower in the range, so I'd probably wait. Then you get this bar, and I was in favor of selling below this bar. Now, to get, I was not expecting this, so maybe you would have been a bit lucky that you got out that quickly by taking the short there. But without that sudden move, I do think it's okay to be selling there. Now, what was going on with this bar? Why was it, so low? Why was it doubling? Why is this one bar twice the day's range, especially going into the FOMC? You really don't see something like this with this bar being that big going into the FOMC. And it's interesting that it got bought immediately, and now we're back at that same price. So when I saw that forming, just in the back of my mind, I was thinking, has the FOMC statement been leaked? And we know, someone leaked it and it came out in advance, or maybe some institution got a hold of it and they were, dumping the market. They were selling here. I don't know. Probably not. I don't know. I haven't been keeping up with individual stocks. Maybe like there's bad news for Nvidia or another company, and the market sold off there. That might have been the case. Now, I always avoid taking trades at least 15 minutes before the FOMC. It's probably okay to wait an hour before the FOMC. You just get too much noise and sideways movement going into it. Like this, this big down, then big up, and then, sideways. It's just kind of tricky going into the FOMC. However, just by looking at the chart that we do have, I'm seeing another wedge. First push, second push, and third push. And this third push is lower than this middle push, but that's okay. It's still a 3-push pattern. So possibly selling below this bar would be okay. Probably waiting on a second entry short somewhere over here would be better. However, since we have the FOMC in 1 minute, that nullifies that. So what I'm going to do is we're going to watch Powell's statement live. So I'll pull this
as
up.
they see it. We already know from the last meeting that they're paying some attention to what could come down the road.
Somehow.
The question, well, yeah, that's enough. The questions to be asked are, how are they modeling that? And with the Fed funds rate at 4 3/8, do they still categorize that as meaningfully restrictive?
I think you'll get that question in about 31 minutes' time.
I think you'll get a lot of questions, but I think that would be a really interesting one. How do you model some of these policies at a time where some are looking at tariffs, some are looking at inflation, some are looking at the open Fed chair seat?
Some assume, some speculate, and some guess, and some have got some real ambition about their career on the FOMC.
Takes a village.
Yeah, that's for sure. Special thanks to Kathy and to feature as well. That Fed decision is about 25 seconds away. The scores go into it look a little something like this on the S&P 500, still down by 0.5%. On the Nasdaq 100, down by 0.56%. Check out the bond market. Here's the whole curve for you. 2-year, 10-year, 30-year. Yields up just a touch, up a basis point or two. On a 10-year, 454.86. On a 2-year, 421.76, up 2 basis points. And finally, just to round it out, your 30-year, 478.87. With the Fed decision, here's Mike McKee.
Initial move often
A nothing burger from the Fed, no change in rates, no change in balance sheet policy, and only small changes in the economic assessment. Recent indicators suggest that economic activity has continued to expand at a solid pace, the first sentence says, a carryover from December. Then a significantly shortened summary, quote, the unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. Recognizing reality, the Fed did remove a reference to the, quote, inflation has made progress towards the committee's 2% objective, if you want to read a future policy clue perhaps into the statement. But that's it. The rest of the statement, other than the committee maintaining the target range at 4.25% to 4.5%, is unchanged. The central bankers say again that, quote, considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As they've said before, risks to the inflation and employment goals are roughly in balance. The committee continues QT, reducing the balance sheet at current levels, and does not mention any endpoint. And while 4 new members joined the rotation this year, Collins, Goolsbee, Musalam, and Schmid, the decision was unanimous. The rather anodyne statement puts the focus on Chair Jay Powell, who will be speaking to us in about half an hour. Other than acknowledging inflation hasn't made progress, there isn't much in here that will lead you to speculate on what they'll do next.
Mike, just stay right there. I just want to share the price action with you, then follow up with the question on the labor market. So equity.
So I'll pause that for a bit until Powell comes back. So far, we did test down to this close. You know, like I was thinking might happen. Now from here, you know, it really depends what Powell's going to say, because he could come out and say our plan over the next year is that we're going to actually raise rates faster than the previous plan, or he could say we're going to, we're going to lower rates faster than the previous plan, or he could say we're going to lower them slower than the previous plan. Either way, right, that would be a shock to the market. So it's not just that initial announcement at 2 o'clock. It's also what he says after. So far, I mean, it's a pretty underwhelming move, right? Just, 15 points. I mean, it's not even as big as, some of these bars here. So we could end up having a trend, although I'm not expecting it to be a very strong trend. So I'm not really expecting too many significant moves. And as we think about interest rates, right, obviously Trump is pressuring Powell to lower interest rates faster. And, Trump wants that. Lower interest rates means higher stock market prices. So that'd be good for Trump and good for people that, hold investments in stocks. Me personally, I mean, I also want lower interest rates for investments to go up, but I'm kind of, I'm planning on doing a lot more travel over the next year or two. And when interest rates are higher, that means the dollar is stronger compared to other currencies. So the dollar is very strong right now, which means you can go to Japan, Mexico, I mean, any of the, the vacation spots, and your dollar will be able to buy more than it would have 10 years ago, 5 years ago. And so for me, I'm thinking, I do want to travel to these places, and it's really cool to be able to go, and it costs a third of what it would have cost 10 or 15 years ago. So, in a way, I kind of want interest rates to stay higher because of that. Now, other people that hold a lot of cash, they would also want interest rates to stay higher because, of course, they can earn a higher rate on their cash. So let's see if Powell's come back yet.
The Nixon tape, so we know what happened.
Yeah.
There was a lot of political pressure on Chairman Burns at the time. In what way will Mr. Trump express his displeasure, and how should the Fed respond?
Well, I think the president will have opinions, as he's indicated, on policy. He'll share those. It's not going to have any effect on the decisions. You know, I was there for round one on that. And, you know, Jay Powell is not Arthur Burns.
Bob?
Yeah, you know, I took away the same thing that the market took away. Where was the dovish bias in this? And I think that's what the market was looking for. And they took out the labor market conditions had generally eased and put in solid. This does not sound like a Fed that's looking for the next opportunity to cut rates.
I think appropriate given the data flow.
100%.
Remember, the SARM rule had been triggered in September. It's now we've had good employment reports. Progress on inflation, which looked very encouraging in October, we've had several challenging months. And so I think this changes make sense.
Well, we talked about 71. Does this remind you of 95 when they only cut 75 basis points and everything was fine? And then they came back and hiked 25.
Well, and of course in 2019 as well, the Powell Fed did 75 basis points, and I think would have stayed there but for the pandemic. So,
well, it's fascinating to see these headlines that largely were expected, but on the margins, a bit of a hawkish tilt, which is the reason why you're seeing a commensurate move in markets with yields marginally higher and stocks marginally selling off. I do wonder, though, Bob, you said earlier the idea that you don't want a rudderless central bank. How is this anything other than a rudderless central bank that's looking at the data in real time and susceptible to any shift?
They've acknowledged that they've done a good job. They've brought the economy to a reasonable soft landing. I think one of the questions that we have to hear Powell answer is, do they still view this level of rates as meaningfully restrictive? I don't think it is anymore. I don't think you can look at this data and call it meaningfully restrictive.
One of the joys of Columbia economics is a gentleman with a bright sport coat, Xavier Sully Martin. He's expert on growth economics, international economics. There's a certitude here of tariffs. I don't buy it for a moment. I think there's huge ambiguity. Could our big surprise be a growth slowdown from any form, any magnitude of tariffs?
Oh, I think so. I think the scenario, I'm not hoping for, but what we saw in 2019 was the trade policy uncertainty was a headwind to the economy. Growth slowed, inflation fell, not only in the U.S., but globally. So you could see a scenario where in the end we don't get a lot of tariffs.
So usually when the FOMC happens, of course, the Forex, the currencies, they see a bit of a shock because interest rates matter for the currency. So imagine you're in a different country. Imagine you're somewhere in Europe, for example, and you have cash and you're looking for an interest rate. If the United States is offering a high interest rate on its bonds, then if those rates are going to go up, for example, then when people in Europe are going to say, oh, those rates are better than the rates that we have here in Europe, we're going to go buy the U.S. treasuries. And by them exchanging their euros for dollars, that makes the dollar currency stronger. So anytime we see the FOMC statement happen and that impacts interest rates, then we'll also see an impact on the currencies. So if rates in the United States are going up, then the dollar is going to get stronger because people are exchanging their currency for the United States dollar so that they can earn a higher interest rate compared to their local currency. So, we saw a little bit of a shock here with the euro dollar, not too significant. We can see has it even closed outside of this range that we're in here. But I just wanted to pull it up and, talk about kind of what's going on with interest rates and currencies and how that all ties together. Diego, good to see you. I'm doing pretty good. It's been a little bit since we've done a stream, so of course I recognize you and thank you for coming back to the stream. Mike, you're down 200. I need a good trade to get back. Well, there are no good trades or bad trades. There is only the expected value of the trade. Right? So it's not like, oh, I won this trade or I lost this trade. It is when I entered, was the expected outcome of that being a positive trade? Of course, I'm getting kind of nerdy and philosophical there, but well, if you're looking for a good trade, you got to wait at least 15 minutes after the FOMC. So, that's my rule, is to wait 15 minutes. So still got to give it a little bit, wait for the market to kind of find its direction.
In a scenario where the Fred Crowley says, we are really done, financial conditions. What I would say, however, is part of the reason financial conditions appear pretty supportive is markets continue to price in rate cuts. In a scenario where the Fred Crowley says, we are really done.
So I'm going to go ahead and just close that because he's not going to be talking for a little bit. Yeah, losses aren't fun, but if you're taking multiple trades a day, then you're going to have a loss every day. If I take multiple trades a day, then I have a loss every day. So market is trying to break out here, but until it does, then it's really not appropriate to bet on the breakout. So I would consider like this close the support and resistance level, and really, we need to close below the low of this bar, and we need to close far below it. Either it really needs to be a significant bar that closes way down here, or have 2 or 3 or 4 bars all closing on their lows. Then that would be a breakout of this. But what we've had here is not a breakout so far. So that keeps me from selling. And then we're also below the moving average. We're getting lower highs. So I'm not really interested in getting long either. Yeah, part of the game. Losses is like cost of business, right? If you run a restaurant, sometimes someone's going to drop a plate, and then that's just how it is. So I'll be on until 2:20. This is one of those FOMCs where we don't really go very far. Some FOMCs, is down and up and down, and then it breaks out, and then it continues down. And that's kind of what you hope for out of an FOMC. But this one is not that kind of FOMC. We're really not really breaking out of anything yet. I wanted to show you guys something. It's a sneak peek. So no one has seen this yet. You guys were the people in the stream are the first to see this, but this is I don't know if you guys really care about trading cards, but this is something I've been working on. So these are like trading cards with like quotes, like trading. It's a trading card game, and this is something I've been working on. So it's trading themed cards, and it's the purpose of it is just to collect and have fun. So I've been working on them. I think I have about 30 made right now. I'm going to get 10 more made. And then, it'll be a game that you can you can buy and, and collect them. And so this is just kind of a snapshot. I have more I'm not going to show yet. These are all just common ones too. So these aren't even the uncommon or the rare cards. Yeah, Fake Guru lost the house. There's some indicators in there. I think I have I have several really cool cards that'll be fun to try to collect. So you guys are the first ones to see that. And I'll have more updates, over the next couple weeks or so. If you guys have an idea for a card, let me know. I might be able to go ahead and make it and work it in. This is the Bitcoin daily chart. You notice there's a market cycle, 3 stages. First is breakout, which is what we have here. Several strong bars as a breakout. After a breakout, usually leads to a channel. So we have a channel, and then after a channel leads to a trading range. So this is perfectly followed the market cycle. Now Bitcoin's in this trading range, and it'll stay in this trading range until a breakout happens. So, I would not expect higher or lower prices in Bitcoin. Well, you can see the lows are actually down around 92 and the highs are around 110. So put that into context. So I would not expect anything lower than around 91, 92 or higher than 110 until we really have a strong breakout. So I would be buying lower in this range and selling higher because it is a trading range. Looks like the market wants to go lower. At this moment, with 2.5 minutes into the bar, it is not done enough to signify a breakout yet. It needs to close. We either need one big bar closing way down here, or we need multiple bars, and then that would be either of those would be a breakout of this. I mean, I'm kind of bearish. I'm kind of bearish overall, on just the market in general. I think we're going to kind of have more sideways movement over the next few months instead of, up. We might have up days and down days, but I'm really not expecting, to be too strongly bullish. Trades I took today, shorted in here just for a little bit, basically got this little scalp here. I also tried to short, so I sold the close of this bar, and I ended up getting out with a 2-tick profit, right down here. So, I'm lucky that I went ahead and basically kind of got spooked out. So I just sold the close and just took a little bit of a profit. And my thing was, I didn't know, it didn't make sense that this was selling off like this. I thought something must have been up. There must be some kind of news that's causing this a sell-off. So I just traded really small. And if it continues down, then, that's good for me. And if not, then I'll get out quickly. And I, basically got out quickly. So I don't usually do too much on an FOMC day, because it is so sideways, I have this bar marked. It's just tougher when you have lots of sideways bars. Now, I mean, if you're doing the opposite, so if you're just selling every bull close and buying every bear close, then you'd make a killing through here. And often FOMC is like that, but it's just difficult to trade before the FOMC. because you don't often have too many big moves. All right, guys. Well, that was kind of a quick stream. I actually thought Powell was speaking sooner. We were going to listen to that, so that's why I did this. But I got to get going. So, thanks for watching for a little bit here. And, of course, if you have any questions, let me know. See you guys.